Hello everyone, this is Marvin from StockMarketPlan.com with your March 16th, 2011 Stock Market Watch. Today the market again continued its downward slide. As you can see in front of you, that's the Dow Jones Industrial Average ETF Spider, symbol DIA. So a lot of volume, closed way down here. Here's our 50-day. We're basically in no man's land right now. The market's in no man's land. I'm looking for the market to either bounce up into prior areas like the 50-day and probably hit its head on the 20-day as well, and then see how it reacts then. Right now, again, I haven't bought stock probably for the better part of, I think, right back here somewhere. Yeah, end of February. Market's just been battling through, and really there's just no range. There was no range there to make money, really serious money, to put any money at risk. And definitely now, I mean, that's actually come here and gotten worse. So it's important to know which way the overall market direction is going, as three out of four stocks will move on the general direction of the markets, the major indices, this being the Dow, which is what you're watching in front of you. Here's spiders. Okay, symbol SPY for the S&P 500, same thing. This is a long-term trend line that I drew. It's a weekly trend line. Let me show you what that looks like. There's what that looks like going back to 2009, the bottom there, in March of 09. And then I just drew it from here to here and extended it to the right. Okay, and the reason why I did that is just because I'm just trying to find out where the next support level is. Some might say that it's around here, right where this pattern here is made here, where it touched right here and then it broke through. It's just that's far away. A pattern like that usually doesn't work unless it's a closer. Generally, that they refer that to as a cup and handle, but it's not really a really good cup and handle. You can see it looks like a cup and a handle. Let me zoom in so you can see what I'm talking about. But it's a really poor example of one. The handle doesn't come down far enough. So the main line I want you to pay attention to here is the one that I drew here, that I just showed you on the two bottoms over a period of 2 years, last 2 years. And when I go back to a daily chart, it happens to come together with the 200-day moving average. With the 200-day moving average right here, this purple line. So this is definitely a supporting area here. Okay, I think with the momentum that the market has, the volume was huge on the spiders today, as you can see. Actually, I believe it goes back to many months before we saw volume like that. Yeah, way back here in July of last year. So we haven't seen volume like this in quite a few months. So it was definitely meaningful. The selling is intensifying. Definitely not establishing new positions on individual stock bases. However, and I've been touting that for how long? I mean, I'm from way back here. So if you wanted it back here, man, you could have gotten it cheaper here, and you could have definitely gotten it cheaper yesterday. So this is why it pays to just let the market settle down, let the smoke clear, instead of jumping the gun and getting ahead of things. I spoke about getting ahead of markets, and that's just a crapshoot, and very few times have I ever won like that. So major selling here. I don't care how many ways you put it. It's not a good thing for going long stock. I think now, again, the market's in no man's land. The next support level is maybe here, but that's just really thin. But definitely here. This is a thicker support. So with this momentum, again, I think the market can just slash right through and get here quickly. Another goofy announcement from a guy gets on the tube today and opens his mouth, and it was really, in my opinion, it was an irresponsible statement. That I believe the quote was, and I'm paraphrasing, the situation in Japan is out of control. Well, the market immediately reacted to that, and let me show you what that looks like. Here's the intraday action of the market. Again, looking at the SPYs. Here's the announcement. Boom, and straight down we come. Now, I get a little bit concerned about when people do this that are in the limelight. I mean, this market is very news driven right now. I spoke about that And I think these officials need to be a little bit more responsible with their commentary. I mean, sure enough, I mean, there's people here that probably went long stock, and maybe they had a short defensive strategy where if this thing took down and took the market down to another level, maybe around here, they would get stopped out. In other words, they would liquidate their position because they maybe thought, it doesn't matter. I mean, it's maybe they thought that the market was I'm going to pick a bottom here, and if it goes below this, I'm going to get out. And they got out, and well, it turned out to be okay. But what if this market would have turned out to the upside after a sharp drop like this? So these guys open up their mouths. They move markets right now. If you, I mean, if you're going to say something, make sure that it's actually, something. And sure enough, the guy came back later and said, you know what, that's not what I meant, blah blah blah. I don't know the exact details, but it's again, just these officials that are running the world, sometimes they open up their mouth and don't really think about what they're saying. And again, it might be true, but who needs it? I mean, who needs somebody saying, something's out of control? Well, what's the worthiness of a statement like that? I mean, it's more an emotion statement. It's not a very tactical, technical statement. It's just a feeling statement. Oh, that's out of control. Well, what exactly does that mean? Well, it doesn't matter because the market here, look, it gave up a lot of percentage points there and really never looked back. So I'm gonna get off that now. I just this is a very news-driven market right now. I am going to be. Right now, I'm 25% cash, 75% equities in my longer-term investments. Short to intermediate, I'm still flat-out cash. Been for most of this downturn, if not all of it. I'm looking to protect assets now. Looking to protect my capital that I've made back, the last 2 years. If I'm up 15, 20, 30%, why would I want to give back 10? I mean, now from the top of this market this year, I think we're down maybe 4 or 5%. I'm not sure, but I mean, it's not 18 or 20. So if I have to get out, I'm thinking if I have to get out and protect my assets, then that's protect my capital. That's what I'll do and wean myself off the position. So I'm looking right now at a daily situation again here. I really think we visit this. We might take our time getting there. Recall our trend line here that I drew. So maybe we come back and bounce, but I think ultimately this market is in a consolidation pattern. And as you can see, even if it does this, this is a very heavy line here. Until we get above that, I'm definitely not a buyer. So anyways, again, we're in the same predicament here with the markets just trending lower. If I had words of advice, it would be just pick your level of pain. I think we ultimately go down here, and if you're fine with that, then you're in business. And for everyone, it's going to be different as far as the pain threshold goes, and what a comfortable loss is. I think from here to here, we're looking maybe at 4 to 5%, 4, 5, 6, something like that. So it's if you're fine with that, then I say you give yourself a shot. I would definitely be a seller of stock if the market came any lower below this 200-day moving average. I mean, that would really be bearish. So I'm just trying to put levels out here for people to see, and do your own homework. Okay, guys, I don't want to drag it out. It is what it is. We are in a very deep correction here in the last few sessions, and nothing looks like it's getting any better. Please, 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 really consider not getting ahead of this thing. It's a crapshoot. We need to have this market base out again, sort of like it did here, maybe at this level, and then come off of there. And maybe it'll do it back here. Maybe it'll do it over here. Maybe we'll squeeze into this back here. Now we've got a wider range, and it's like no man's land right now. Where does it go? So I'll be here paying attention to it, taking a good look at it, and we'll go from there. Again, this is Marvin from StockMarketPlan.com with your March 16th, 2011 Stock Market Watch. Make sure you check us out on Twitter and on Facebook under Stock Market Plan. Have a great one, guys. We'll talk to you tomorrow. Bye-bye.